The exchange of goods for money is rarely the first event that occurs with a sale. When a customer inquires about products we offer, or if a sales rep wants to present buying options to them, we might want to prepare an estimate. If we're using the home screen, it's very easy to see that estimate is really the first part of the sales process under the customers category. We can also create estimates from the customers menu, and if estimates aren't available or they're not displayed, then they simply need to be enabled in the Preferences screen, which can be found under the Edit menu. No matter which way we do it, once we activate the Estimates feature, an estimate form is displayed on screen. We'll maximize this so we can make sure that we can see as much as possible on the screen, and then we can begin processing or filling out our estimate. It's important to mention so that we remember that at this point, both customers and items we sell should be safe and secure, having been added to their appropriate lists. If not, no worries, as is usually the case, we can add customers, items, and even payment terms and customer messages as we create sales forms, and that includes estimates. The other good news is the skills we're going to use right now, the ones that we need, and the techniques that we use to work with QuickBooks estimates is exactly the same in almost every QuickBooks form that we have. The specific information may be different, but the concept is similar. When working with sales, there is not much difference between an estimate and an invoice as far as creating, managing, and distributing them goes. What we learn about estimates will be the same when it comes to invoicing. As we start to complete our estimate, we will find out that these pieces of information are exactly what we would expect to happen. First, we need to select a customer or job from the list, or of course, we can add new on the fly. We can select a customer from the list, and all of the related information from that customer record automatically helps populate the estimate. For example, on the right-hand side, we have the name and the address. At the bottom of the estimate, we also can see that this customer is supposed to be charged with Arizona state tax. This may seem, well, wrong if we take a look at where the company is actually located, and it certainly could be, which is why we need to be diligent when we're creating sales forms. But remember, sales tax is probably the most complicated of all features, simply due to the many factors that go into configuring it and applying it correctly for every customer, every product, and every jurisdiction. In this case, the billing address is in Idaho because the company uses a service to process their payables. The product, however, will be used in Arizona, so that is the sales tax we need to apply. This was set up in the customer record initially and is just being reflected here. It will also be reflected in our other sales records unless we change it for a particular transaction. If we convert this estimate to an invoice, then all of this information will be carried over with it. And we didn't have to type anything, we just selected a name from the list. Of course, it's important to attribute an estimate to a particular customer, but probably the most important part of an estimate is having items that we're providing a bid or a proposal or an estimate for. These can be selected from the item list. Again, we could add a new item, but usually our inventory items and services should already be entered. We'll make a blueprint charge, and of course, that would result in some blueprints. And then maybe we're going to make a concrete slab. Just like with the customer, when we select items, the rest of the information should automatically populate, assuming that it was added when the item was set up. Our blueprint change doesn't have a description. The blueprints themselves and the concrete slab do. Now, what's interesting about an estimate is we can then move over and put in the quantity. We'll allow one change to the blueprints to be made. One set of blueprints should be enough, and also one concrete slab. Next, we work with the values, and this is where estimates are a little bit different than an invoice. For an estimate, if a cost was entered, it will be displayed, and then QuickBooks will do the math by multiplying the quantity times the cost to give us an amount. We also have the opportunity with an estimate, though, to add markup to that particular amount, because after all, that's our cost. We can play with all of these numbers, either adding more markup or just putting in an amount that we know we want to charge as a flat fee, if we don't like what has been offered, or if we know we need to make a specific deal with this particular customer. So let's say that our charge for blueprints is $325. Remember, this is our actual cost, what it costs us, in this case probably, to pay a draftsperson. So the calculation is made, and we can't change that. But under the markup, we actually can. We can choose a variety of different rates: a base rate, which has no markup; commercial pricing, in which we offer a 10% discount; industrial, which gets a 15% discount; or even residential, which applies a 5% discount. By selecting any one of these options, it will then help us modify the pricing for this particular estimate for this particular client. In this case, we'll go ahead and leave it at the base rate, which does not give a discount. Notice that while we can't work with any of the calculated fields, we can adjust the total. So no matter what we've said about our cost and our discount, we can always move into the total column and simply type in a value. In this case, we've decided to charge the client $315 for blueprints. If we're following that same scenario, and probably because there's not just a standard price for a concrete slab, it depends on a lot of different things, we'll type in a value here as well. While the tax status for both products and services and customers should be already set, we can modify this here by using the drop-downs and making it either taxable or non-taxable. Since we're talking about a construction company, and this construction company is about to do a job for pouring some concrete, it makes sense that we might think about possibly having additional documentation that needs to accompany estimates or invoices. If we move to the very top of the screen, we will see an option to attach a file. When we click on this option, we can go ahead and record our changes and then add documents when the window appears from any variety of sources. We can drag and drop from our Outlook email, our desktop, or folders, or we can also use the options from the top of the screen for attaching from a computer, a scanner, or the Intuit Document Center. We'll go ahead and choose computer, make sure that we're on the desktop, and we're looking for a contract. There's a Word document called Contract for Services, and we'll just double-click to attach it. This document can be found in your Chapter 9 Working Files folder, by the way. The ability to attach not only a single document, but as many documents as we need is available throughout QuickBooks. We can attach documents to customers, to vendors, to items, to employees, and of course, as we can see here, even to sales documents. It's perfect for applying contracts, spec sheets, schematics, or whatever may be relevant to whatever item we may need to work with. This is something that's been needed for a long time, and we now can not only add one document, but multiple documents, and basically any type of document we may have can be attached. We simply drag and drop or attach it, and when we're finished, we click Done on the bottom right of the screen. So generating an estimate is fairly straightforward at this point. Basically, it's a matter of filling in the relevant pieces of information from existing QuickBooks lists. But an estimate and invoice are basically the same. And if that's true, then why do we have two different forms? Well, other than just the titles, there is something that makes them different. First of all, an estimate is not a promise to buy. It's something that we are providing in order to encourage the customer to buy. But other than that, the titles on the top of the page are pretty much the only technical difference. That is, at least as far as the physical look and appearance goes. What's most important about an estimate versus an invoice is that an estimate does not affect any account balances or reports. An estimate is for informational purposes only. It allows us to see what has been promised to a customer and under what terms. But estimates do not in any way modify or change any accounts in QuickBooks, including inventory levels. Products will not be removed from inventory until an actual invoice is generated from an estimate. An invoice would be the next step, and we hope that's what happens. But it's important to remember that if an estimate never does come to fruition, if the sale doesn't occur, we can come into the estimate and we can mark it as inactive. That way, nobody will consider it open and everybody will know that basically the deal is dead. If, however, we need to save our changes, then we'll move to the bottom right of the screen and click or tap Save and Close.